Welcome to TradeTheMBA.com. This is John. This report is for the 22nd, and while we continue to push up to new highs, retrace, we had some softness develop a little bit towards the later end of the day as there was debate of whether or not the stimulus package would be approved immediately or whether there would be a delay in it. It looks like there's going to be a lot of wrangling until that deadline approaches really close with the end of the bonus unemployment benefits, and because it's a real issue if you don't have that extra stimulus going through the economy, and there's a massive amount of cash that has to be spent by the federal government in order to meet their obligations. Otherwise they end up with just too much money, which they already have too much cash as it is, which is an odd thing. Even though it's borrowed, it's just still, you got to spend the created funds. So we can see a dramatic push-up of the short interest developing right there, so potential DOC spread, but we're still in rising shakeout. So from that standpoint, not the worst we've seen. I'm going to add the Power 2 back into the daily as well, just so you'll be able to look at that one as well. From an NQ standpoint, obviously it was a little bit slower from the ES standpoint because the ES had to catch up to where the NQ had already been, and getting a little bit more consistency. Still much stronger with that cyan well below the red as well. Now you almost have though cyan approaching above zero, which could present more softness. And of course we have positive extremes through all this, so it's got to get filled back into the 76. Is that right now? It's possible that we could have a little continuation, but as soon as we get a spike back up of steel, assuming steel doesn't dip below the negative 13, we'll just continue to hold place. And of course they've got the euro up to the top side of that range, and that's because of the instability that's taking place in the US still being a little more attractive, because Europe at least has activity that is consistent, whereas the US is still too sporadic and too uncertain at this particular stage. And of course oil popping up at that new high level, still not a significant enough breakout, and they're still waiting for significant change in the US. But the gold, because you're starting to see now there are international scenarios building. You've got tensions with China, US, you've got China-India tensions, we've got buildup of problems that are taking place in Libya, where Turkey is getting involved with Egypt, agreeing to send troops. So there's going to be some growing world tensions that certainly make gold much more attractive. Intraday standpoint, pretty good stuff. I mean, we started up with this high rise, positive extremes, creating new levels that needed to be filled back in. And as soon as weakness came, we started back at the first levels. And then we kind of fluctuated, but then we started getting these big sigma events on declining modes, which signaled future broader moves. And while the ranges were still good, once we ended up with the really good weakness, then we ended up breaking all the way back down and filling the positive extreme from the earlier morning. And that happened right before the close. And then right before the close, we ended up with a nice buy turnaround configuration, and it led to a nice pop. Then in after hours, you pop back up to the highs and bring it all right back. And once we dip back below the 44 range, we were in a nice little soft decline right there. Just got an improvement signal just shortly ago, right around that 39 level, and we're pretty close to it right now. All in all, really good stuff. So no real objections to anything that's happening here. We've got really good ranges and still fitting within our extreme expectations. So just continue to keep following those and play the gyrations while we're sort of in a I don't even want to call it stagnant mode. We're just in a volatility phase where they take advantage of short weakness to drive price higher, and then when that fades out, they let it dip back down and rinse and repeat. And it just makes it effective to continue to do these slow rise as you do that, because you're really not putting yourself all in or at risk. But again, it's still difficult when you're talking about negative yields on so many other asset classes. It just makes the broader market. Really the only play in town if you want to get a return of any kind. As always, though, I will put up anything unique and interesting on the Skype chat. Trade well. We'll talk to you later.